All right, so I've been talking about the deficit. Actually, one of the most popular videos, as small as our channel is, it's been about deficits, and it keeps getting views. I think it's up to like 1,200, 1,500 views now. That's what I like about YouTube. You put a video out there, it doesn't do anything for the first 2 weeks, and then it blows up. I'm like, okay, I said it 2 weeks ago. I wasn't important then. It is important now. I've been talking about the deficits, right? Remember, I said we just broke $35 trillion. Hey, okay, so let's say hi to people. Vic is here. Lynn is here from, I think, North Carolina. Cheeky Chops. Vic G. Hey, Jeff is here. Jeff Mike Drop Barbecue. Go check out his channel. He doesn't do finance, but he does a lot of good gig work. Gig related live streams and content. So check him out. He's got a good channel. He calls it the way he sees it. So the issue here is I've been talking about the deficit, U.S. budget deficits, federal deficits, right? We're at $35 trillion. We just broke $35 trillion with a T. And every 100 days, the deficit is going up by $1 trillion. Think about this, people, okay? In another 100 days, we're going to be at 36. Another 100 days, we're going to be at 37. Another 100 days, we'll be 38, 39. We are mortgaging our kids' future. Okay, I'm not going to be on this planet for too much longer, hopefully another 20, 30 years. But the point I'm trying to make is, what are we passing on to our kids? What kind of example are we setting? Because if I ran my house like the US government runs their house, I would have declared bankruptcy like 10 times already. Okay, borrowing and spending is not a good thing. Debt is a good thing. Borrowing is a good thing. Okay, borrowing accelerates your success rate. But if you borrow at the clip that the US government is borrowing, there is cost involved in that. And one of the major costs is interest costs, because when you borrow money, what do? You pay interest. When you go buy a car, the bank charges you interest. They're not going to give it to you for free. They just lent you for $30,000, $40,000, right? Well, that's called servicing the debt, and then it has an interest rate on it. So the same thing is happening with the US government, right? With the federal deficit. So they go print the money. They don't even print. They put zeros in their ledger, and then they blow the stack, or they put it on fire somewhere. I'm going like, okay, but where's the money going, right? And then when we do that, it's an IOU basically. And this IOU is sold all over the globe to the US pension plans, to the individuals, or, other governments around the country. Japan and China used to be the largest holders of our debt. Now they're liquidating. I talked about that. And then, but all we're doing is adding to the deficits. Well, when we add to the deficit, right, what happens? We have to pay interest on every piece of bond, note, T-bill that we're issuing. Well, that's the IOU's interest. That's the return that the buyer is looking for. So as you guys remember, I've been talking about this. We created the inflation by pumping so much money into the economy with zero interest rate policy over the last 15 years, right? What did it do? It created inflation. It's a man-made thing. It's not a joke. When inflation gets created, the antidote for inflation is higher interest rates. So what they do is they raise rates to kill inflation, to kill the bug. Are they going to be successful at it? Well, we'll see. But for 2 years, the Federal Reserve raised the rates from ZIRP, zero interest rate policy, to 0% basically, to 5%. Well, we know what happened to our car loans, to our mortgages, to everything, or to our credit cards. We pay interest on all of those things if we carry balances, obviously. So, well, guess what? When the rates go from 0 to 5%, all the notes that we're issuing, all the bonds we're issuing in the trillions, right? Well, we have to pay the buyer of those bonds or give him a return, right? And that's called the interest rate. That's the coupon on the bonds we're selling. Well, when we raise the rates from 0 to 5, not only my mortgage went up, or my car loan, interest payments went up, and also my credit card balance payments went up because the interest rates went up, right? But the federal government's interest expense is also going through the roof, and that's what I'm going to talk a little bit about in this topic. So interest expense. This is just interest expense, people. Okay, think about this. Interest expense on the U.S. federal debt is now at a record $3 billion per day, every single day. Think about this. Okay. If you multiply 3 billion times 365, it's over $1 trillion just in interest we're paying to somebody who's holding these bonds. $1 trillion. So not only is bad enough that every 100 days The structural deficit is going up $1 trillion. The interest we're paying on these IOUs is up to $1 trillion a day. Don't you guys think we could take that trillion interest if we didn't have that? We can fix our school systems. We can fix our homelessness. We can fix a lot of things with that $1 trillion. I don't even know how many zeros are in a trillion. But the point I'm trying to make is we are paying, all of us are paying for that interest, okay? So $3 billion per day. This is triple the amount, triple, paid 10 years ago and has doubled in just 2.5 years, okay? Total annual interest costs on federal debt, just the interest cost alone, okay, has reached a whopping $1.1 trillion in Q2 2024. Think about this, people. Think about this. Okay, 1.1 trillion in interest alone. What the F is going on, right? So even if the Fed cuts the rate, so now I did a really good video actually last week. Please go check it out. Who needs lower interest rates the most? We do, obviously, as the consumer, right? Mortgage rates will come down. Housing purchases will start again, because I talked about housing affordability in this country, which is horrible at the moment, because mortgages went from 3.5% to 7.5%. And car loans went up, right? Our credit card balance interest costs have gone up. Well, guess what? The government's cost has gone up too, because they raised the rates from 0 to 5%, and now they're paying for it. So who needs lower interest rates the most? Yeah, we do, as the American public or the consumer. But guess what? The federal government actually needs to lower interest rates the most, because just servicing this debt that's out of control is up to $1.1 trillion a year. Even if the Fed cuts, so after today's debacle, there was a jobs report that came out today. We're definitely going in a recession. Now they're going to accelerate the interest rate cuts. Instead of doing 1/4 points 8 times, which is what's forecast, I think they're going to probably do 0.5 points at least the first 3 times. But it's expected that the Fed is going to cut the rates at least 200 basis points by the end of next year. Why is the Fed cutting the rates? Economy is slowing down. We're going in a recession, right? Well, just like when there is a lag effect, and everybody thinks that if Fed cuts the rates, market's going to do well. No, Fed is going to cut the rates and market's going to tank. I did a video last week about that. In fact, 2.5 months ago, when I first started the channel, I said the day they cut the rates is going to be the day the market tops. Well, market 6 months ahead, look where the market is today, right? So even if the Fed cuts the rates by 1 percentage points, which is 100 basis points, and all the government bond yields decline by 1%, daily interest expense will still be at $2.5 billion. Because what's happening is that there are a lot of bonds that we have issued 10 years ago, 20 years ago. They're all maturing. They're being replaced with new coupon bonds, right? Because we have to put a coupon on this, on these notes, bonds, treasury bills that we're selling all over the world. Hundreds of billions of dollars are being sold and issued every single day, because we have no money coming in. We have to issue them to replace the old ones. Plus, we have the new additional debt. Remember, every 100 days, $1 trillion, right? We got to print and put those notes out there. So this issue of the interest rates going up not only hurt the American consumer and put the economy in a recession, most likely, but it's hurting the federal government as well, because their debt situation is out of control. So they have to service that $35 trillion in debt by issuing new debt, and the new debt interest rates are higher. So you guys see what's happening here, the domino effect, right? So who needs the lower interest rates the most? The U.S. government does. I mean, because this is out of control. $1.1 trillion. A year, $3 billion a day, right? So, and the last sentence says it all, actually, and I'll end it with that. The debt crisis is an understatement, no kidding. And on the chart, you guys can see, this is I always say, pictures are worth 1,000 words. Look at the chart, right? It's been steady, steady, steady. Why has it been steady? This is the interest payments only, right? Okay. In dollar terms, on the right scale, right axis is the dollars, okay? On all the debt that we've been accumulating, interest rate cost, or the coupon cost, has been fairly low, because we kept the rates at 0% for 15 years, okay? But now look what's happening now, right? And look at that chart. That looks like a beautiful stock chart, right? Going from lower left to the upper right. Well, you don't want that happening with debt. So we're up to $3 billion a day. And U.S. government has to cut the rates, not only to get us out of recession, that we're going to experience probably next 6-8 months, but they need to lower their interest cost as well. And so this is all happening because of this debt that we do. The Washington's hunger to print and spend the money, but not only they don't have, okay, but spend the money by borrowing it. I mean, I said this a million times. You guys may agree or not disagree. U.S. is a much bigger version of Greece. The only difference is they have two things on their side. One, we can unlimited amount of printing we can do. Well, they don't print. They add zeros to their ledger because there's not enough paper to print those trillions, to be honest with you. And number two, U.S. still is considered the world reserve currency. But I talked about that before. The BRICS are going away from U.S. dollars because U.S. dollars are trash, right? I mean, inflation, 6-7% per year. Your $100 is definitely losing 6 to 7% of value every year. And this is the result. This is what we do. This is what you mismanage. That's why I'm really hoping, actually, because it's not a political thing, but if Trump wins, and if he does what he says he's going to do, we definitely need a government efficiency expert. Well, who better than Elon Musk? Just like he did with Twitter. He went in there with a kitchen sink and it goes, okay, out of all 8,000 donkeys that are working here, I only need 2,000 of the best of you. The rest are doing nothing. And Twitter is still running, isn't it? That's what this country needs. I'll actually volunteer for that. I'll work for free with Elon. You know, we need that. We need an efficiency expert in this country. We need to cut this shit. We need to stop. I have 2 kids. I feel horrible for their future. Horrible. So that's that. Second topic. Well, actually, this goes with the first topic. So the U.S. is going to, the prediction markets are saying that the Federal Reserve is going to cut the rates 8 times by the end of 2025. And I agree. They should have started cutting earlier. They're behind the curve as usual. And this is what happens. They're always late to the party. They raise the rates too late to kill inflation, and we know how inflation hurt us, and they're going to lower the rates too late. So, and when that happens, when they cut the rates, hopefully we'll get some relief, and the government interest costs don't go through the roof as well,